you're somebody that has a problem on trusting your own analysis or doubting yourself, then this video is going to be for you. Now, there are thousands of reasons why traders do end up in that situation, but in my personal experience, there are three main things that could literally change the game for good. And in this video, this is exactly what I'm going to do. I'm going to explain you step by step each of these points coming out from my personal experience, and at the end I'll give you some tips as well. And don't worry, I'm not going to tell you the usual BS that you hear everywhere across the social medias. I'm going to give you some tangible fact that you can literally implement straight away starting from today. Now, let's start with the first one, which is the rule of 360 of a topic. What do you mean by that? Now, this is very, very important, and this is something that I see a lot of people making mistakes about. Is say that you got a strategy. Now, let's take one pretty popular or pretty simple. Say that you got something that has to do something with the order block. Now, you probably, if you are into SMC or if you're not even into SMC whatsoever, you probably know what is order block. But even if you don't know what is order block, just listen to me, because it's not the order block that matters, but it's a message I want to send you across that matters the most. Every time you see a theory online, the first thing you do is like, oh, I like what this guy is doing. I like his strategy. You know what? I'm going to jump on the chart and I'm going to do exactly what he's doing. So in this case, if you take the order block, which was very popular back like in the last couple of years, now it's no longer valid, but whatever. What happens is that people be like, oh, so this is an order block. You just mark the last candle down before they move up, and then you place an entry, right? So this is exactly what a lot of gurus will teach you on how to do that. Or probably, I don't know, you're trading market structure, right? And a lot of people will be like, oh, when you get the pullback, buy in the pullback, because whatever reason, this is the market structure, the way it works, okay? So what happens is that when you watch a tutorial and you learn this type of concept and theory, you just apply them. But you don't do the only one thing you should be doing, which is literally questioning what are the 360 variable this specific concept can have on itself. What do you mean by this? You see, every system that you learn, right? Every theory that you learn in the market, they all come with specific variables. So let's take, for example, the order block, right? Now, everybody knows, and if you don't know, is usually order block is the last candle to the downside prior to move up. As simple as that, nothing too crazy. But the problem here is that this concept has different angles. What do you mean by different angles? Is that an order block can have different type of shape, right? Hold on, it can have a different type of shape, maybe with a huge wick to the downside, or an order block can have nothing, maybe a small body, wick on the top, at the bottom, or an order block, you cannot even spot it because you don't know how to do that, right? So what happens is that once you are learning a strategy and you are understanding the implementation of the strategy, by you now asking this type of question, which are pretty much what are the limitations, what are the variables, right? What are the opportunity in that specific system, you are failing big time. Why? Let me tell you why. Look, so say that I'm going to take a simpler one. Say the market structure, right? Now, everybody is teaching you online, oh, this is market structure, high, low, do this, take the trade from here, and you go higher. Similar to order block, you need to understand that the market structure itself, right, has a different type of variable, because you need to see what happens, for example, when market gives you a retracement with, say, a lot of choppiness, or let's say when market gives you with a lot of momentum, right? Or let's say why the market structure fails and then goes towards your direction, or why sometimes market can do something like this multiple times and then go your direction, right? So what I'm trying to say here is that regardless of the strategy you use, regardless of the system you use, is very, very important that you always question the 360 angle of that specific system. You need to figure out, right? Listen to me carefully. You need to figure out what are the limitations of the system. You need to figure out what are the different angle of the system, right? What are the case scenario that can happen of that specific system, right? It can be anything, market structure, support resistance, order block, you name it, you have it, right? And then what are the advantages of the system when exactly you do get to see that specific topic shining the most. Now, you might be wondering, why on earth I'm telling you this, and what does this have to do, right, with, don't trust in your analysis? Well, just think about it. How many times have you found yourself on doing something, just again, doing a strategy, right, for some reason that has failed? So you're going to do, for example, let's say here, you're trying to buy over here, and for some reason, the market structure didn't hold enough, and it failed. How do you feel? How do you feel, especially not knowing why the system has failed, right? I'm sure you've been absorbed by frustration. I'm sure you've been absorbed by a lot of worriness, a lot of not trusting yourself, literally, because you're like, damn it, I studied, I backtested, I've seen that, and how come this one is not working? Why? Because in your head, in your mind, you did not put all these variables that I was talking about, the advantages, the limitation, right? And so on and so on. So this is one step that you definitely have to start doing it, whatever, regardless of the strategy you're using, starting literally from now or tomorrow or whatever, after you're watching this video. And hold on, let me just delete this. Okay, and now we're gonna be moving to the next two as well. Okay, so you guys will see slowly how all of this combines together. Now if I, sorry, just let me remove this one. Okay, so if I take the next one, which is another important reason why a lot of traders fails, and again they don't understand why they hesitate so much on the analysis, is because they're missing out something very important. Now if you start breaking your own system, right? How many times you did your analysis, right? You did your system, you did your trade and everything, but some reason you break the rules, right? So you enter probably a bit early, you probably remove your stop loss, you probably close your trade early, you're not capable of following your system, or you end up probably breaking it. Now this is another reason, right, why people start losing trust on their analysis, because they start losing themselves, they start losing, right, the trust they have within what they do and who they are. But technically speaking, this is way more easier than you can even imagine. Now why I say this is easier, let me give a real life example so you can understand. The main thing I've seen across traders is that they don't have an established goal. What do you mean by established goal? Is that if you're starting trading, the first thing you think about is, oh, I'm going to make money. I'm going to make a lot of money. Fine. You want to make a lot of money, or you want to make money. Whatever you want to do, you need to establish a goal. You have to have a realistic target. You have to have a realistic expectation, and you need to navigate across that specific goal, right? That's what you need to do. So once you establish a goal, right, you need to navigate your system, your entries, your ideology, your routine, your whatever, across this goal. Because if you don't have a certain specific targeted goal and aim for, right, ladies and gentlemen, that's exactly what will trigger you to break continuously your rule. Why? Just think about it. If you got an exam, right, we all did some type of exam in our life, whether it's a driving license, whether it's a school, whether it's what, blah 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 whatsoever. If somebody says to you, you got an exam, right, and they gave you a specific date, what exactly they're doing? They're giving you a sort of goal, right? They're telling you that, well, the goal is the outcome after the exam, but what I'm trying to say here is that is your goal. You know there is an exam, you know there is a date, right? So what is it you do? You prepare yourself, regardless of how busy you are, what busy you are, your life around that, right? So you make sure that your preparation meets the expectation, whatever is coming next. So therefore, if you have to study, let's say straight for the next 30 days, the likelihood of you saying, oh, you know what, I'm not studying today because I don't want to do it, I can do it later, is very lower compared to someone that just need to study, right, without having an exam. Okay, so if you don't have an exam, you don't have a date, I mean, let's be real. How many times would you have studied? How many times you wanted to do something, like going to the gym, I don't know, doing a hobby or something, and you said, oh, you know what, I'm going to skip it today, it's fine, I'll do it tomorrow. Or I'll do another day, it's fine, I can do that. The reason why you think like this is because you don't have a goal, right? If you go to the gym and you have to compete somewhere, or you have a bodybuilding, whatever, I don't know, right? You will be more focused, you will be more laser focused, and you know that you need to take and respect specific system and methodology in order for you to succeed, right? So what makes you believe the same thing is not in trading? You see, guys, these kind of things seem so silly, but at the same time, they are so vital. Like if you don't establish, I mean, I'm pretty sure at least half of you, or maybe all of you that are watching this video now, they might don't have any goal. They don't know what amount of percentage or what is exactly they want to gain out of the trading, the system, the long-term goal, the next 3 months, 6 months, 12 months, right? You need to establish that. Once you establish that, you know that you cannot break your rules, right? Breaking your rules, it destroys human psychology. It destroys you as a trader, and you stop trusting yourself and analysis because you know that you're not capable of following the specific rules, right? So by starting implementing specific goals will help you to actually follow more your rules, and you're not going to break them, right? Now, this one is very important. The third point is the randomness versus personal failure. What do I mean by this? Is that a lot of you guys tend to be harsh on yourself, and which is normal. I've been there as well. I've been harsh with myself as well. And what happens is that if you don't fix these two, point one, right, and point two, what happens is that after coming out of this continuous, mindset where you don't understand why your system failed, or after breaking your rules because you don't know exactly what the hell was going on the chart, you come to this specific point where you actually start blaming yourself and feeling like you're useless, or feeling like you're not capable of doing it, or you're feeling like you want to give up because it seems like the market is against you, it seems like the system is against you, it seems like everything is against you, or how come others are doing it and you're not doing it? Well, you see, you need to understand that once you fix these 2 points I discussed over here, okay, what are you doing next is that you need to be able to distinguish between your success and your what's it called, a maximum failure point. What do you mean maximum failure point? So if you, for example, have all these 2 point checked in properly, right? And now say that you're taking a trade. Cool. Now you want to go for buy because you want to go bullish, right? And you see this thing failing. The first thing that you need to notice and understand is if this is caused by the probability of the market, so from the randomness of what the market does in a technical perspective, or is it actually caused by your emotion? So that is very important. You see, a lot of traders, they don't ask this question. Every time you hit a loss, people froze and they don't freeze. They don't know what to do, right? Emotionally, they get stable. But the real question you should be asking yourself is this loss that I seen here is a technical valid loss, probability wise, or if this loss is a loss that I'm taking it because I've been doing something out of my plan. And this goes back to what? Breaking your own rules, right? So I call this emotional losses. Okay, so now what happens in here is that if you don't know how to distinguish between a technical valid loss and an emotional loss, ladies and gentlemen, you will never trust your own analysis, because maybe this loss was absolutely valid, caused by randomness of the market. However, because your state of mind is not on the right place, you start blaming yourself. So now you feel like you're a failure, you feel like you're a loser, you feel like you did everything absolutely wrong, which is not true. Okay, which is not true. Now, to wrap it up, I'm going to give you a fix. Well, a fix. I'm going to give you a little tips because obviously I need to talk hours and hours and hours about this type of topic. By the way, I actually do this on my one-to-one. So if you guys are interested on doing a one-to-one session with me, the link is somewhere here in bio. And I do teach this kind of stuff also inside my mentorship. So that is something that if you guys are interested, again, you can find the link somewhere in the description. All right. Now, let's go to the, the bonus and some tip. Now, again, this is a very wide topic, but I'll give you for this video something to start with. First thing first is that I don't know how much you guys believe this, and I don't know how much you know about it, but when you are a trader, you have two things that are literally your best friend forever. And a lot of people that underestimate these two things so much because they feel like, no, that's useless. Oh, no, you don't need that. Well, number one is your trading plan, right? And then number two is your trading journal. Now, I'm not going too much deep into this, but what I'm trying to say is that your trading plan, right? It is the result and the outcome that comes from this and this, okay? And your trading journal is where you take insight of randomness and your personal state of mind, okay? And you need them. Now, I'm not saying that you should be jumping on YouTube and trying to understand, okay, how to structure a trading journal, how to structure a trading plan. That's not what I'm trying to say. What I want you guys to understand is that the trading journal is vital because it records every failures of yours, right? I'm not talking even a winning trade, because a winning trade is fine. Winning trade, if it goes, right, it's okay. It's something that goes on your advantage. But what does not go on your advantage and ruins you, that are losses. So having a structured, logical, proper trading journal will help you to improve on your losses and being able slowly to understand whether your loss was technical or was based on personal feelings and emotion. Again, I will probably make a better video about it, but now in terms of in terms of trading plan, right? Trading plan is a must because you don't understand how powerful your mind is if you have a bad day. If you argue with your family member, if you argue with your girlfriend, your boyfriend, your whatever, something bad happened to you, that day, those are the days where the trading plan is going to save your ass, because you're not going to be using your mind. You don't need to use your mind to understand how to take your setup. What you do is that you have a plan, right, that hopefully has a step-by-step guidance on that, right? And once you have that, all you do is just, you see phase 1, you see phase 2, you see phase 3, and you apply that. But then again, the trading plan itself, it has a lot that goes into it. And based on everything I've been teaching you guys, try to incorporate these 3 things that I just said into your trading plan, into your trading journal. And again, I'll try to make a better video, and if anyone is interested on my one-to-one, I do explain this very in depth, because this is one of these key failure I see among a lot of traders not having it. And on my one-to-one, I explain them literally how to structure the trading journal properly and how to structure a trading plan that you can be wrong with, like literally. Anyway guys, this is enough for today, because I don't want to overwhelm you with a lot of information. I will see you to the next one, and for those of you that are interested in joining me, the link in here, I'll see you inside. Stay safe.